You think you need to know if the trade will win. That's the real problem. 95% of traders won't pull the trigger unless they're certain. 5% pull the trigger aware that they'll never be certain. And this tiny difference, this single shift in thinking about knowing, separates everyone who makes it from everyone who doesn't. This isn't about being smarter. It's about seeing the difference between what trading actually is versus what your brain desperately wants it to be. 95% see trading as a certainty game. Find the right setup, do enough analysis, and you'll know what happens next. 5% see trading as a probability game. You'll never know what happens next, and that's completely normal. Same charts, same market, different worlds. Let's be clear about something. If you're in the 95%, if you need certainty before you trade, that's not weakness, that's biology. Your brain evolved over millions of years to avoid uncertainty. Uncertainty meant danger, and that's why not knowing where the predator was could get you killed. Your ancestors who craved certainty, who needed to know before they acted, those are the ones who survived. You inherited that wiring. The need to know isn't a character flaw. It's survival instinct. But here's the brutal truth. That same instinct that kept your ancestors alive is destroying your trading account. And if you become aware of this, you can change it. Trading punishes certainty seekers. This has always been the case, not because they're bad at analysis, not because they're not smart enough either. Very simple. Because certainty doesn't exist in trading. It never has. It never will. You need to start by accepting this. The market doesn't offer certainty. It offers probability. And the moment you manage to understand that difference, everything changes. 95% spend their entire trading career searching for something that doesn't exist. 5% accepted that truth early and built their entire approach around it. That's why while they're winning, the 95% portion is losing and never realizes this is the problem. The need for certainty destroys most of our trading careers. Here's what certainty seeking looks like in real trading. Let's look at it now. Sarah has been trading stocks for 18 months. She has a system. 6 criteria. When all 6 criteria are met, she's supposed to take the trade. She's aware of this. She backtested it. 68% win rate exists. 2-to-1 risk-reward. The math works. The system works. But Sarah doesn't trade the system. She trades her need for certainty. And unfortunately, she's not aware of this. A setup appears. All 6 criteria met. Sarah sees it. She knows she should take it, but she hesitates. What if this is one of the 32% that loses? What if the market reverses right after she enters? What if she's reading the pattern wrong? She needs more confirmation, so she adds a 7th criterion, then an 8th. Then she's checking 3 different time frames. Then she's reading news headlines to make sure nothing unexpected is happening. By the time she feels certain enough to enter, the trade has already moved. She either chases it and gets a worse entry, or she watches it hit target without her. This happens 5 times in 2 weeks. 5 perfect setups, all 6 criteria. All would have won. Sarah took 0 because she wants to be certain. The system tells her some setups won't work, but she doesn't act as if she's accepted this. That's why she seeks certainty. Then something shifts in her brain. She thinks, maybe I'm being too strict. Maybe I need to be more aggressive. And the next setup appears in front of her. Only 4 out of 6 criteria are valid. But Sarah feels frustrated. Her emotions are telling her something else. She feels she has to take this because she missed 5 winners being too cautious. And she takes it, because she needs to get back in the game. This setup stops out. Now she's even more confused. Her emotions have taken over more. When I wait for certainty, I miss trades. When I don't wait, I lose. What kind of work is this? She asks herself. She starts to tilt. The problem isn't that Sarah doesn't know her system. The problem is she's trying to use analysis to achieve certainty. And analysis can't give you that. Ever. Actually, even though she knows this, she still seeks certainty but isn't aware of what she's seeking. She thinks the problem is discipline. The real problem is still her approach. Still seeking certainty. Still being too cautious because she struggles to accept stopping out, even though the criteria are met. Now compare that to how Michael trades the same market. He's been trading for 3 years. He also has a system, also consisting of 6 criteria, also 68% win rate, 2-to-1 risk-reward. But Michael's relationship with certainty is completely different. Nothing like Sarah's. He sees a setup appearing. He waits for all 6 criteria to be met, and this happens. Michael sees it. He doesn't ask himself, will this trade win? He already knows the answer. Maybe, maybe not. Doesn't matter. The criteria are there, and he's aware of the win rate. He needs to try. He must operate his system. Before pressing the buttons, he accepts both outcomes. Both outcomes are normal for him. He asks himself this: does this match my system? Yes. Then he takes it. That's the entire decision tree. Emotions aren't a factor. Certainty isn't a criterion. Not will it win, but does it qualify? He takes the trade in 15 seconds. No additional confirmation, no checking news, no seventh time frame. Criteria are met or they aren't. If they are, he trades. If they aren't, he doesn't. Whatever the outcome, it's normal for him. 3 weeks later, Michael has taken 8 trades, 5 won, 3 lost. His account is up 4%. Sarah, in those same 3 weeks, took 2 trades, 1 won, 1 lost. Her account is flat. Same market, same general strategy, different relationship with certainty. Sarah needed to know. Michael accepted he couldn't know. And this situation freed him. Sarah's need for certainty created paralysis on good setups and desperation on bad ones. That's why she can't reach the results her system should deliver. Michael's acceptance of uncertainty created consistent execution. That's the difference. Actually, quite simple. Let's go deeper. Why does 95% need certainty? It's very important that we know this and constantly remember it, because our brains are wired to predict. Prediction equals safety. If I can predict what the lion does, I can avoid it. If I can predict where food is, I can survive. Your brain is a prediction machine. It's constantly trying to forecast what happens next based on patterns it recognizes. It hates uncertainty, and that's why it always seeks clarity. This worked incredibly well for most of human history. But trading isn't about hunting lions or finding berries. We can't control it. That's why we must accept uncertainty. We shouldn't fight it. Trading is participating in a system with millions of variables, most of which you can't see, influenced by participants you can't predict in time frames you can't control. Trying to achieve certainty in that environment is like trying to predict exactly which raindrop hits the ground first during a storm. You can analyze the wind, the altitude, each drop. You still won't know. Because it's a probability system, not a certainty system. If you think you need certainty to become a profitable trader and reach your dreams, you're wrong. You can change this belief. Here's what happens in your brain when you trade while seeking certainty. You notice a trading opportunity. Your analytical brain says this matches the criteria. But your emotional brain, the amygdala, screams, "Wait, you don't know if this will win." It whispers you need to be more certain. Yet you don't need to be certain, but your amygdala doesn't care about probability. It cares about threat. And uncertainty is a threat. So it floods your system with cortisol. You feel anxiety, hesitation. Emotional intensity starts to increase. Thinking rationally and making decisions becomes harder. Our tendency to act more primitively increases. That's why you need more proof, more confirmation, more certainty. You analyze more. Yet you just wanted to operate your system, but now you're seeking certainty. You check another indicator. You wait for one more candle. You're not doing analysis anymore. You're doing anxiety management. You're trying to make the feeling of uncertainty go away. And it never does. Because certainty doesn't exist, and it never will. You either freeze and miss the trade, or you eventually override the anxiety and take the trade, but you're already emotionally exhausted. That's why managing the trade properly becomes harder now. Afterward, when the trade moves against you even slightly, that same amygdala screams, "I told you so," and you exit early. Or when it moves in your favor, you close the trade immediately to lock in certainty. You don't want to let this profit turn back into uncertainty. This continues like this always, until you become aware and start applying your system no matter what. You make peace with stops, and despite your need for certainty, you take trades without certainty. That's when things start to change. Now it's time to compare this with how 5% think. They see the same setups. Their analytical brain says this matches criteria. Their amygdala says, but you don't know if it wins. It demands more certainty, confirmation. It says wait. And here's the critical difference. They agree with the amygdala. You're right, I don't know, and I don't need to know. What I know is this. Over 100 trades that match these criteria, 68 will win. I don't know if this specific trade is one of the 68 or one of the 32. I'll never know until after. And that's normal. I'm not betting on this trade. I'm betting on the system. On probability, the uncertainty doesn't go away for them either. They just stopped needing it to. They pre-accepted both outcomes. This trade might win, this trade might lose. Either way, I'm taking it if it qualifies. This acceptance short-circuits the anxiety loop. The amygdala still fires hot, but there's nothing to negotiate. The decision was already made before the setup appeared. If criteria are met, trade, period. They take the trade, and they know they did the right thing, whatever the outcome is. And as they keep doing this over and over, this process becomes easier. It becomes less stressful. Here's the shift that has to happen. You have to stop asking, can I predict this outcome? And start asking, does this match my edge? Those are completely different questions. The first question has no answer. It never will. You can't predict individual outcomes in a probability system. This is impossible. The second question always has an answer. Yes or no. Does this trade meet my criteria? If yes, execute. If no, don't. The outcome of this specific trade is irrelevant to that decision. What's relevant is whether you're following the process that creates positive expectancy over many trades. So if you're taking a trade that matches your system, this is a successful trade. The outcome is actually irrelevant. Think about casinos. The house doesn't know if the next spin of roulette wins or loses. They don't care. They're not betting on spins, they're betting on math. The wheel is structured so that over thousands of spins, the house edge guarantees profit. Any individual spin is uncertain. The aggregate is certain. They've accepted uncertainty on the micro level to achieve certainty on the macro level. 5% of traders think like the house. They don't know if this trade wins. They know their edge wins over time. 95% think like gamblers. They're betting on this spin. This one needs to win. And that need destroys their ability to execute the edge that would make them profitable. It takes them away from where they're actually good. Let's talk about what this looks like practically. Kevin trades Forex. He spent 2 years developing his strategy. He knows it works. 72% win rate on backtests. But when it comes to live trading, he can get stuck. Some months he makes money. Some months he loses it back. He hasn't figured out why yet. So he starts journaling differently. Not just what trades he took, but what he felt before taking them. Pattern emerges immediately. Every trade he took where he felt certain beforehand, he notices usually ended badly. He'd convinced himself it was certain, ignored some criteria, added his own narrative. These setups felt so obvious that he didn't follow his system. He followed his feeling of certainty. Most of those lost. Every trade he took where he felt uncertain but took it anyway because it matched his criteria, those performed exactly at the expected win rate. 72% won, 28% lost. No better, no worse than the backtest. The difference wasn't the market. It was his internal state. When he needed certainty, he traded poorly. When he accepted uncertainty, he traded his edge. We go through such processes that trading can turn from a money-making tool into an emotional satisfaction tool for us. And because of these kinds of things, we struggle to apply our system with proper certainty. Because in the beginning, mostly, we start this work with the wrong mindset. We can become addicted to trading, and if so, operating a system for our edge can be very difficult. But we can change. Don't worry. We can have a healthy relationship with trading. This is possible. Let's continue with the story. Afterward, he tested something. Next month, before every trade, he said out loud, "I don't know if this will win. If it matches my system, I take it anyway. The outcome doesn't matter." He forced himself to verbally express the acceptance of uncertainty. That month, he took 14 trades. All 14 met his criteria. 10 won, 4 lost. 71% win rate. Almost exactly matching the backtest expectation. His account was up 6%, best month in 8 months. Nothing about his strategy changed. His relationship with uncertainty had completely changed, though. That was what made the difference. And he'd been looking for answers in the wrong place for a long time. He stopped trying to know, started trusting probability, and probabilities started working for him. Here's an uncomfortable truth for you. The better you get at analysis, the more dangerous certainty-seeking becomes. And that's why as we progress in trading, knowing more things can produce bad results for us. Because you can always find one more thing to check, one more confluence, one more confirmation. And your brain will tell you, this is being thorough, being professional. Unfortunately, your brain is lying. But really, you're just feeding the certainty addiction. You're trying to analyze your way out of uncertainty. You're trying the impossible. Rachel is a perfect example of this. She knows 12 different technical analysis methods: Elliott wave, Wyckoff, ICT concepts, advanced price action, volume profile, market structure. She can spend 4 hours analyzing one chart. And she does. Every potential trade gets the full treatment. By the time she feels certain enough to trade, one of two things usually happens. Either the trade already moved without her, or she's so mentally exhausted from analysis that she can't execute properly. She wins maybe 40% of her trades. Not because her analysis is wrong. Her analysis is often brilliant, but she's using analysis to achieve something. Analysis can't provide certainty. Compare her to Tom. Tom knows three things: support, resistance, and trend. That's it. His analysis takes 10 minutes. Setup either meets his three criteria or it doesn't. If it does, he trades. If it doesn't, he waits. He doesn't know advanced concepts, doesn't care. His win rate is 62%, higher than Rachel's. How? He's not trying to know if the trade wins. He's trying to know if the trade qualifies. Those are different games, and this creates all the difference. Rachel is trying to predict. Tom is trying to execute. Rachel needs certainty. Tom trusts probability. Rachel's knowledge became a trap. Tom's simplicity became freedom. You should test your system enough and then trust it. If you haven't tested your system enough and you don't actually trust it deep down, this might be the reason for your need for certainty. Think about it. Let's continue. One of the things that's always asked is this: but don't I want to improve my analysis to increase my win rate? Wrong question. The right one is this: does my current edge have positive expectancy? If yes, your job isn't to improve the edge. It's to execute the edge you already have. Most traders have a profitable edge. They just can't execute it consistently because they need certainty before they trade. And that need makes them either freeze on valid setups or force invalid setups. The edge isn't the problem. The certainty addiction is. We must free ourselves from certainty addiction. Here's what 5% know that 95% don't. Probability only works if you execute enough trials. Your edge might win 60% of the time, but for that 60% to materialize, you need to take enough trades. If you take 10 trades, you might hit 4 winners and 6 losers just by variance. This doesn't mean your edge is broken. It means you haven't given probability enough trials to express itself. Casinos know this. They don't panic if someone wins 10 hands in a row. They know, over 10,000 hands, their edge plays out. But traders, we take 5 losses and think the system is broken. We needed certainty that these 5 would win. When they didn't, we lost faith. We don't understand probability. We're still thinking in certainty terms. The shift from certainty to probability isn't comfortable. Your brain will resist. Every time you take a trade without being certain, your amygdala will fire. You'll feel anxiety. That's normal. That's biology. The difference is 5% feel that same anxiety and trade anyway. They don't wait for the anxiety to disappear. They act while uncertain. And over time, the anxiety lessens. Not because they became certain, but because they proved to themselves that acting without certainty is safe. That probability works even when individual trades don't. That trusting the process matters more than knowing the outcome. Here's the bottom line. Trading is a probability game disguised as a prediction game. 95% never see through the disguise. They spend years trying to predict, trying to know, trying to achieve certainty. They add more indicators, more analysis, more confluences, trying to find the combination that lets them know for sure. It doesn't exist. 5% figured that out early. Stopped trying to predict individual outcomes. Started trusting aggregate probabilities. Stopped needing to know if this trade wins. Started asking, does this trade match my edge? And when the answer was yes, they executed. Without certainty. With probability. You don't need to know if this trade wins. You need to know if this trade qualifies. You don't need to predict the outcome. You need to execute the process. You don't need certainty before you click. You need acceptance that certainty isn't coming. The market will never tell you for sure. It will only tell you probably. And probably, when executed consistently over enough trials, is more than enough. That's how 5% think. That's how 5% win. Not by knowing more. By needing to know less. Not by achieving certainty. By trusting probability. Same market. Same opportunity. Different relationship with uncertainty. And that makes all the difference.